Welcome, finally with you. Sorry, it's a different background. This time I'm from home. I got a bit sick, so I'm from my living room to be honest. So welcome is another live analysis as usual, right? Every Wednesday. And actually it's quite an interesting one because it's Thanksgiving. And that's the final working day for US markets. US markets will be closed for a long weekend. It's Thanksgiving, so you know that you can understand that there is a lot of repositioning so far today because it's the final working day for the US markets due to Thanksgiving. So just before I start and analyzing the markets and see together what you should focus on and what's not. Just give me a second to make sure that even the people in the GoToWebinar can see us and they don't have any audio or visual issues. Let me make sure, guys. For anyone that is participating in this live analysis through the GoToWebinar, please stick in the question box a yes or a no, just to make sure that sorry that the that you can hear me and see me and see my screen um, as usual. Okay, I can see a lot of attendees over here, so I will go through the events and in general the market sentiment until I have a feedback from the people in the GoToWebinar. I can see okay, perfect. So guys, feel as I'm usually saying, this is your session. You are free to ask anything you want. I'm here to help anyway. That's why we call it live analysis. Hello everyone. Hello Abu. Hello Han. I can hear you loud and clear. Thank you for specifying it, dear Johnson, because I'm from a little PC here in my living room, so it's a bit of an issue. So okay, I haven't shared my screen yet just because I want to go through a bit um, what's going on. Okay, there is a lot of confusion, if I can say, this week, and that is quite reasonable if we consider it that is a short week. Okay, and there are a lot of mixed messages, mixed minds, but with the usual suspects as our big risks as ahead. And I'm referring to growth, I'm referring to inflation, I'm referring to interest rates, because at the time that we believe that we're gonna breathe again with China back open, so demand to be back on track, because after all, China is one of the biggest, it's the second biggest economy in the world. Now we keep seeing the COVID cases once again in China, and is this a turning point again? Are they gonna get back to the tighter restrictions? Are we gonna have partial lockdowns? You might think that that doesn't affect you, but it does, because it's one of the biggest consumers in the world for oil, for commodities, for industrial um, products in general. So we need to keep our heads up to date with what's going on. So it affects also the sentiment. So okay, have this at the back of your mind. So in general, the mood today is a bit tentative, okay, for the most part at least. We have seen equities overall. The sentiment in equities more or less to be the same as last week. So they still the S&P 500, US futures in general, found a bit of a support, not a significant one, but they remain higher. The same stands for European, so there is an overall optimism. Um, but as I said, it's the final day for the US markets of the week, so it might be um, that might be due to the um, ahead of the Thanksgiving holiday. Sorry, I lost a bit my words. So overall, a more tentative mood in the market, um, and the reason that we might see a bit of a support in general, a bit of a tentative sentiment, might be also because the attention right now is next week is on the jobs. Okay, jobs in the U.S. and Canada, but mainly US, remain solid. Okay, another solid number will clarify a bit that this is a technical recession rather than a proper recession for the US. So that's the play, they play a bit with words, but it is what it is. If indeed the jobs remain solid, and if we see the inflation declining, that would be ideal, if I can say that, for the US economy, because there will be the officials will prove that indeed it's a technical recession, okay, not and not a global a recession like the rest, the proper recession, normal recession like the rest of the world. But okay, I know that you're getting a bit tired with me bumbling a lot, so I'm gonna continue with the fundamentals, but we're gonna see some live charts as well on the platform. So give me a second. Perfect, Jamus. Jamie, if you want to see also, you can actually, guys, for those out there on the GoToWebinar, you can also participate in this live analysis via YouTube and Facebook. Okay, just saying. Okay, so okay, perfect. Everything works properly and excellent. So from Bangladesh, welcome. Hello, Wiz as well. This is live, yes. So you can ask anything you want, Chris. If you want me to check gold, write down gold. If you want me to check any asset you want, and preferably advise, guys, whether you have a preference on the time frame as well. Okay. Okay, I can see that Emma, as usual, is posting Dow and S&P 500 for our chart. Please, what's your take on dollar? Do you share your screen? Yes, I'm gonna do it right now. Sorry, my bad. Sorry, guys. Just now. Gold. Okay, I'm gonna start with Emma. First come, first served. But anyway, let's start with the stocks just to see the sentiment that I mentioned before. Okay, so okay. Okay, let me just give me a second because something's going on with the people in GoToWebinar. Sharing. Guys, I can see that your screenshot. Okay. Come on. Sorry, guys. Just give me a second, please. Why? Finally. Okay, it's fixed. Okay, guys, so sorry from the people that they were in the GoToWebinar. So, as I was saying, here is the um, Okay, perfect. So USA 30, so Dow Jones and S&P 500. Let's say 30 and S&P 500. Let's put it on. Let's start with Dow. And Emma mentioned 4-hour chart, but I'm gonna start as usual with my daily chart, just simply because I want to show you that it persists on this 4 months high. So that was back in August. You can see after many, many, many days of dodginess, sideways candles, small body candles clearly showing indecision or even correction. We had a nice boost yesterday with the asset holding itself above 34,000. I'm worried that something is wrong over here, but you can see my screen. Perfect. You guys in the GTW also can see my screen. Guys, for those, okay, just one more thing, okay? One more thing. Just in case that anyone is struggling in the GoToWebinar, okay? I'm gonna post the YouTube link, okay? The YouTube link. Sorry, I'm delaying you over here. I know. I'm gonna post for those in the GoToWebinar the YouTube link just in case you face any problem in order to enter to the to use YouTube instead. Okay, I'm sorry for that, but it might be my PC's fault. So here we are. Okay, perfect. Central. Okay, now I don't have to worry about the people in GoToWebinar. Perfect. So we are back. Excellent. Okay, team, USA 30. As you can see, back in the 30 minute so after a nice drop down, okay, quick recovery, all the losses that we have seen in August and September, retesting right now the peaks of August, with actually just a breath away, because the highest value that we have seen in August was at 34,284. So it had a nice boost yesterday, extends or holds the gains so far today. But I would like to show you that this is looking like an inverse triangle. So, and what I mean by inverse triangle, okay, and you see that? Here it is, expanding, I should say, expanding triangle. So that's why that would be the last candle of the week. So if it sustains the last weekly candle of the week, right? Tonight we're gonna have the weekly candle close. So a sustain of these gains, okay, to April, August top, that could signal further appreciation and further boost for the asset, with a potential resistance at 35,000. Even though we need further confirmation, okay? MACD is still negative. RSI is pretty flat, as you can see over here, but I'm gonna shift down to the daily chart just to show you that even though the long-term outlook, the medium-term outlook from the indicators perspective, it's very, very mixed. However, the fact that in daily chart we have we have an up channel for nearly 2 months now, a nice break yesterday outside of this 1, 2, 3, 4, 5, 6, 7 sideways days, along with MACD that remains well above zero, RSI flirting with 70 indicate that the bulls are there. The bulls are still in control. Okay, so the big obstacle over here is the August peak. It's this latest peak. So if the asset today holds a positive session, okay, that, as I said, could suggest further further positive bias back to the 35,000 round number, but also another peak in 2022 back in May and April. But confirmation is required, and everything depends on today's session. Okay, whether we'll finally uh, breaks decisively August 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 peak. Now let me move on to the 4-hour chart. Okay, because I'm asked for the 4-hour chart. As we can see in the 4-hour chart, we have a rising MACD. Okay, rising MACD. RSI is not so helpful at 67, but a bit flat. So I'm gonna zoom out a bit, and you can see that there are waves over here, right? So 1, 2, 3, 4. That's 5, but continues upwards. So it's not. We cannot claim that it's an Elliott over here. But what we've seen is a bit of a correction, and another attempt to the upside, breaking these latest highs. A bit of an expanding Bollinger's over here, overbought sideways. It's not so helpful, my dear Emma. Let me use my 5 and 9 exponential moving average as well to see whether they are helpful, and they are not. As I can see, we have some consolidation for the time being. So we need to see some, as I said, another attempt to the upside, or at least a breakout of this latest high at 34,172. Okay, so consolidation it is right now. MACD is rising indeed, but there is a flattened 5 and 9 exponential moving average, flattened RSI, a bit of a sideways Bollinger's as well. Yeah, no indication for the time being. I'm gonna go down to the 1-hour chart as well. Yeah, you see, sideways, flatten flatten MAs. Okay, stochastic over here. Sorry, RSI over here. Slip lower. I'm gonna add my stochastic as well, just to see in this very short time frame, such as the 1-hour chart, whether we have further indication. Okay, stochastic is in agreement with RSI. So there might be some pressure, but intraday. In order to imply that we're gonna have a complete pullback, then we need more than that. We need at least a return back down to below 34,000, okay? And more precisely, yeah, over here. So we need more than that. So that looks to be a correction. That looks to be a bit of a pullback because it was overbought. That's what it is. Not really something to alert that sellers are in control. Okay, just correction. Now, USA 100, as you requested. Here we are. Pretty similar picture, but the S&P 500, due to the pressure from the technological sector, from the energy sector, and etc., we've seen that it remains. You see, this is a daily chart, okay? It didn't really recover significantly, so it remains a bit mix to negative. So I'll keep zooming out. I want to show you this long term trend. Why? Because I want to show you that in contrast with the Dow, it remains to a downtrend with some ups and downs, but in a downtrend, lower peaks, lower bottoms. Okay, this is a daily chart. So by connecting the peaks that we have seen from the beginning of the year, you have a very important resistance trend line. Okay, so keep an eye on that. Put that on because it will help you in the future. So for the time being, indeed, we have a nice recovery, around 60% of the losses that we have seen since August, but it looks to be just a rebound before another attempt to the downside, extending this downtrend. Key resistance is the trend line that I have put, which actually coincides with our Bollinger Band over here at 4080. Okay, that's the next key resistance area for the asset, because over here is expected to be a nice retracement level. So any indication that it will get back down, it will be key, because it will alert the beginning of a new downtrend like this one, like this one, like this one, and so on and so forth. So that's the overall picture, okay? That's the overall picture, that this rally that we have seen for more than a month now, it is a temporary long-term correction of this downtrend. And I will show you also the weekly chart just to see a bit more clear what I mean. Down, lower high, lower low, lower high, lower low, and so on and so forth. So that's key. That's key, especially for next week, because it will be key, because we're gonna figure out whether it's starting a new downtrend or whether the overall downtrend, overall bear market could change. Even though from fundamental perspective, that looks a bit not so likely from fundamental perspective. Okay, so now for our chart, according to Emma, so some indication over here from stochastic, but yeah, flatten RSI, flatten MACD. You see, even though we've seen a rising histograms, the signal line is really close to zero, and that agrees with RSI, which is flattened, agrees with the flattened moving average, agrees with the sideways movement, and the small body candles. Remember, the size matters. The bigger the candle, the more the power, the more the strength, the more the bias, the more the momentum. Small, tiny, no body candles just clearly show how mixed is the market, how confused is the market, how cautious is the market. So, in contrast with Dow, S&P didn't manage to breach the highs that we have seen in November, okay? Neither in August, and so on and so forth. So, over here, there is a range, and this is how you could I'm gonna, okay, yeah, I think that's much better. This is how you should or ideally it would be here on this double bond. So it's a range, okay? It's a range. So we, for having a clear indication, we need to see the asset exiting this range, okay? A break above it could find resistance at the 4008, let me be precise, just 4,800, that should be it. Yeah, 705, 4075, sorry, 4075. From the other hand, indeed, the asset is keep moving into an uptrend. Okay, so something that will be also helpful is to add, along with the trend line that I put on, is to add this channel. And why is that? Because my dear Emma and all of you guys, I'm gonna minimize a bit my indicators because I want to show you something. Right now, there is so cautiousness, so mixed minds, so confusion that we've seen these dodgy small body candles. But the interesting part is that we have seen that on the middle line of our channel. So this is what you need. You need either a nice decisive candle, 4-hour candle, getting back below the midline, or bouncing away from it, because the combination of sideways movements with the ranging market, let's say, with the breakout, along with the fact that it's on the middle line, and a future either nice strong rebound or a decisive pullback will clear that we might have a retest of not solely of this the bottom of the range that we spoke before, but also the bottom of our channel if it's a pullback. If it's a strong bounce, then initially the first resistance will come on our trend line, while further move above it will could extend gains up to the upper trend line of our channel. Okay, so if I zoom out just to show you, can you see that? Okay, so let me see your questions just to make sure that I'm not missing any. So let's move on. Emma, I hope that was okay. Hi, friends all over the world. Hello, Fred. Emma, she is always there. She is always there. Yes, indeed. Impact on the FOMC. Oh, significant. Okay. You know, the weird thing. Okay, FOMC is always a factor, an event that affects the markets. But something bizarrely happens right now, because even though we know that they will increase rates, especially in December and January, and possibly February, because they say so. They told us we're going to peak as high as 5.1% interest rate. So we know that they will keep rising rates. But the weird thing this year, and I don't think it happened to me ever again in my career, is that exactly because that's their ceiling, and exactly because we have seen a lower inflation lately, pretty solid labor market, and in general we have seen a slight improvement in the economic data in the US. The markets have already started pricing in the dovishness of the FOMC. So the fact that once they pick the 5.1% interest rates, they will start either pausing the tightening, pausing at locking at 5.1, or even start deducting interest rates. So that's the weird thing that we have seen, that we have to face, to be honest. Sorry. That we have to face by the year end and in general. And that's why stocks have found a rally. Is all these squaring positions, not solely because of the Thanksgiving, but the fact that the pricing in for December interest rate is over, it's done, and they have already started pricing in the possibility of of a second quarter or second half of the year ahead, with lower interest rates from the Fed. So the markets are well ahead of the events, actually. That's why I mentioned about mixed minds, okay? Because the key question is how high, how long, and how much damage will be done by inflation, by growth, and by interest rates. And the stagflation risk is still there. And that is what is an increasing worry, especially from the FOMC, because if they continue, they were the very first, actually not the very first that they increased rates, but the more aggressive central bank in the world that in a year it reached nearly 4% interest rate. So even though they might be they might prove that they did well and inflation started calming down, has started to slow down, the stagflation is still there. It's a big risk. Okay. So what I'm trying to tell you guys is that indeed the FOMC meeting could make a significant impact in the market. It might um, it might actually add it might reverse the stock market more precisely. So it would be good to avoid trading such an event, to wait until the comments are out, okay, before deciding to enter the market, because we have a lot of contrast, okay. They said that they will reach 5.1% and stop, but on the flip side, the only thing that we keep seeing and seeing and seeing again and again for 2 weeks now is a lot of hawkish comments from the officials, okay, which are largely ignored from the stocks. But yeah, it is what it is. But they might also relieve the stock. It depends how they will be sounded. So what else about the FOMC? So if today, since you asked me, Mosea, if today the FOMC states that they confirm that they will slow the tightening, that would be good for the stocks. Okay, guys, just that's the summary. Just remember, if today the FOMC says that, you know what, I'm gonna slow pace of tightening, I'm gonna so that could be positive for stocks, and it could uh, um, support the stocks. That would be a big relief for the stocks. And that, on the anticipation of this scenario, that's also reason why the stocks are in a buying mode. Okay, that's why we have seen them increasing and rising on the belief that that the FOMC will be slowing the pace of tightening. So we might see more deep buyers, but let's wait and see. So, or what else? What else? What else? Let me see your questions. And sorry, also don't forget energy sector. We had a strong, more than 3% rise in energy sector. That immediately affects the S&P, because 11 of the sectors of S&P are related to energy. So any gains on energy companies, on energies in general, metals, etc., any rise on those, any boost on those, it has a positive impact on S&P as well. So any better than expected earnings, bounce in energy, in oil, in gas, implies to support for S&P 500. Okay, so let me see the rest of your questions. Sorry. Ooh, a lot of questions, and I'm delaying you. I'm sorry. Gold. Okay, gold from Muhammad, gold from Rohit. Okay. Okay, now. Okay. Are we in a turning point or not? So, okay, guys. I think not for the time being. Why? Indeed, we have a very nice, decisive pullback. But the buying over here was so aggressive with huge daily candle, overbought for days, for 1, 2, 3, 4, 5 days in a row, overbought. So it needed a correction. A correction is always a case. I mean, nothing can go up forever, nothing can go down forever. Okay, nothing can go down sideways forever. So what we have for the timing is just a correction, unless if we see the asset turning back below 1726, or just to be more precise, let me use my Fibonacci, and 1720. Okay, it's just a breath below, it's 23%. Return nearly 25% of the gains that we have seen in November, but it has reverted only just 25%. So for the time being, it's not an indication that it's getting back to 1700 or it's getting back to 1600 territory and so on and so forth. For the time being, it looks that this is a correction. It found the floor for 3 consecutive days, so it's for a third day in a row at this floor, increasing the odds. So it's at 3 days in a row, holding a floor at 1731 level, and that increased the possibility of a rebound again. Okay, momentum indicators agree with that because RSI, even though it's lower, it holds above 50. MACD also a bit lower, but still positive. Okay, can you see that? You see? Still positive. So for the time being, the fact that it holds for 3 days in a row the 1731 territory, okay, is just imply to some consolidation ahead of the closing tonight, before any potential rebound. Okay, now what I'm gonna do, I want just a second. I want to make sure. So I want, that's my 200, and I want my 500 as well. 50, sorry, 50. Come on, come on, come on. 50 blue, not magenta, blue. Didn't put it on. I have it over here. Okay, I'm gonna use both as exponentials, and that should be exponential as well. I'm just keeping an eye. Okay, just to make sure that okay. Okay. Okay, very interesting. So, okay, Tim. So you need to pay attention, especially to 1730. Why is that? Because other than the 3 days bottom, okay, sorry, other than the fact that it's a 3 days bottom, it will, if it breaks, it could open the doors initially to the 20-day moving average and 50-day moving average. Okay, and if I just put again my Fibonacci on, you're gonna see that it coincides, both of them coincides with the 50% Fibonacci level and the 61 Fibonacci level. Okay? Okay, so keep an eye on 1730. Now, intraday, 1 hour chart, zoom out. This is exponential. Should be exponential, perfect. Okay, perfect. So what we are having over here, let me use my stochastic as well. Excellent. So we have some ups and downs as usual. Oops. No, no, no. What's going on? Very interesting comments from Mosea. We have few events, yes, at by the likes of initial jobless claims, and other how will that impact the market on stocks, US 30 specifically. Okay, a rise in the jobless claims, okay. You understand, jobless claims is the unemployment. So a rise of unemployment will have a negative impact on the dollar, and as a consequence, a rebound on the a rebound on the stock because they have inverse correlation. Now, I quite agree with no, who made that comment in regards to okay, with Dobby. You mentioned S&P 500 will be buying during NFP because interest rates are low and unemployment rate is higher, inflation rate is low. What if the NFP missed massively? What if they missed massively? It is one of the most volatile event of the month. Okay, if indeed it came strong or at least in line with expectations, okay. Interest rates are not low, by the way. The Fed is the most aggressive tightening since 1970, I think. So interest rates are high. Unemployment, uh, I'm confused a bit with your comments, Masande. So you're saying that S&P, yeah, that the Nasdaq will get stronger during NFP because interest rates are low. Interest rates are not low. Am I missing something over here? Unemployment rate is higher, inflation rate is lower. You lost me a bit over here. You lost me. So, what is theoretically the case is that the higher the interest rates, the lower the stocks. The higher the unemployment, okay, so indicating recession, indicating a big hit of the employment sector, etc., that could support the stocks. Okay, that's the theoretically. I certainly, in my opinion, think NFP and CPI will sell for December. Okay, yes, theoretically, after this rally that we have seen, especially in October and November, I think you're referring. No, Samuel, I did reply to your question. Actually, it took me a lot of time. You were here? Okay, give me a second. Okay. Um, yeah. Considering considering the rally that we have seen from stocks, okay, the two events could be could um, could be buying the rumor, selling the fact case. Okay, buying the rumor, selling the fact. But everything depends on inflation rather than on NFP. To be honest, because we now waiting for the confirmation that indeed what we have seen in October it was the ceiling, and now we're gonna have continuous declines on inflation. Because if that slowdown that we have seen lately was once off, that will bring back all the cautiousness, all the worries, the possibility of not a technical recession, but an actual recession in the US economy, more tightening, more aggressive tightening from the Fed. So that could um, that could imply to an even stronger dollar and a big potential sell-off of of the stocks. But everything depends on these numbers because it was a once-off event. We need to have a confirmation. That's why the inflation in December it might be the most important event until the end of the year. So I understand your perspective, Mosea. I cannot neither agree neither disagree. Okay, but indeed I understand your comment because we might see buying the rumor, selling the fact thing. Indeed, we might see that. But it's not only what we think, right? It's what we see as well. So we need to keep and monitor our momentum at least to figure out what will happen eventually. Um, Samuel, I did reply to your question. Hello, Salek. So I'm getting back to you again, Samuel. So your question was in regards to, let me get up, FOMC and how it will affect, wasn't that one? Wait, because I have so many questions and yeah, impact on the FOMC on Dow. So I did reply to that question. So what we're expecting from the FOMC today is to pretty much present and confirm a potential slowing on the pace of tightening. So if this indeed happens, that could support even more the stocks and as a consequence the Dow Jones as well. If they indeed come up and say anything, I mean, if they are dovish, and they hint that they want to start slowing down their tightening, that would be positive for stocks in general. But what is bothering me is that the inflation and the NFP, um, sorry, the NFP is next week. So inflation. I'm wondering whether they will wait to see inflation as well before hitting something like that. So, uh, sorry, I didn't cover the gold. One, gold. Okay, let's get back to gold, guys. So, what I was saying about gold. So, firstly, just a quick briefing of the metals in general. Okay, so, um, sorry. what we have seen this week, and actually since last week, it was some kind of a support. Okay, I should move on to the 4-hour chart, maybe, or the daily chart. We had seen, as we had seen earlier, a nice, strong, decisive rally, and right now a pullback. But what is key, as I said earlier, is this 1730 territory over here. Is a nice floor, 3 days floor, so that we clear up a bit whether we're gonna see a retest of the 20-day moving average and 50% retracement level or not, okay? But that looks from the momentum perspective. If we check MACD, if we check RSI, okay? I'm gonna ignore my stochastic because I use it for only for the 1-hour chart. So if we check RSI and MACD, we're gonna see that this looks to be just a correction before another attempt to the upside. So keep an eye on the 1730 territory. A break and a move again above the 23.6 Fibonacci level, so that is around 1750, could open the doors to the latest peak or even greater to the Bollingers, to the edge of our Bollingers over here at 1800s. Okay, that is from daily perspective. Intraday setup, okay, what we have over here, we have something looking like triangle, not a triangle, these are actually, let me just connect the peaks. And over here, where is my extension? Perfect. And we have a higher low, so lower low, higher low. So I'm gonna use, since I'm in the 1-hour chart, I'm gonna use my Fibonacci extension just to find some intraday support and resistance levels. So here we are. Perfect. So the asset indeed, they came back to 100% Fibonacci expansion to be more precise. And here we are. Excellent. 100% is now, if I zoom in further, and it now is bouncing, okay, between the between the 161 Fibonacci extension, but we have seen some long tails the last 2 hours. Long tails to the downside. That indicates, and small ones to the upside. That indicates that there is more selling pressure than buying pressure. The same is something that we're seeing also in our MACD, which turned negative. RSI holds below 50. Stochastic already posted a bearish cross 2 hours ago, and is keep pointing slightly lower. So that indicates that there is still some buying pressure, selling pressure, selling pressure. If I go to the 30-minute chart, I can see that, okay, that was some kind of a recovery, but again, very narrow, flattened Bollingers, moving averages, RSI at 50, MACD negative, stochastic, okay, it shows that it recovered a bit, but not decisively for the time being. So we might have we have some kind of a rebound, but struggling to break that 17,400 territory. So the outcome from all the things I have just said is that there is more bearish pressure for the time being instead of bullish one. You can see that also in the lower time frame and also in the slightly higher time frame, such as the 4-hour chart. So if I just emphasize on the body of the candles, as I tell you, the bodies of the candles show you a lot, helps you a lot. So if I just emphasize and zoom and just monitor or study a bit the bodies of the candle, okay, you're gonna see that we have long tails the last 2 hours. Okay, we had a long tail higher as well in the European session, but as you can see, it came back down and closed below the open price. So again, that indicates that we have the bears in control instead of the bulls. Okay, keep that in mind. Let's move on with the next questions. Gold, gold, with euro and dollar, please. Of course, euro and dollar. Where is my euro and dollar? Here it is. It dominated the trades lately, right? Due to the weakness of the dollar. But so far this week, we have a lot of confusion. As I said, guys, to try to explain everything. It's a very short week due to Thanksgiving. So that's why we might see a bit of a closing positions, repositioning ahead of next week's NFP, GDP number from US, Powell's meeting next week, discussion about the economy, FOMC today indeed. So yeah, okay. Nevertheless, let's start. What we have over here is the asset breaking. I'm gonna zoom out a lot because I want to show you something. I had it on the works PC, but not on this one, so it's a shame. But I want to show you that if I just use a regression channel just for actually I'm gonna use that is more helpful, I think. No, yeah, this is what I wanted to. Okay, perfect. So if I just use the channel, a channel since the beginning of the year, okay, so this is for the whole 2022. So, and even if I zoom out, I mean, if I use it exactly by connecting the highs and the lows, that's perfect. That's perfect. You can see that it break it initially. Initially, that was mid of October, okay, and then broke it again in the end of October and moves above it since then. So, is this an indication for a new long-term trend, a complete change of the outlook? Just saying, just asking. Is a very important breakout which has been sustained, and I'm gonna use, even though okay, we might need further proof about it, but even the fact that it broke it twice and is moving above it, also the fact that it's already returning more than 48% of the losses that we have seen the whole year. That's key. That's key. Just I'm putting some questions in your head to have in mind for the future. So that's the long term. So in the long term, it looks that we have a signal of a potential shift of the outlook of the euro dollar outlook, even though the fundamentals are not supporting a strong euro. Okay. So now, from technical perspective. Floor is at 102. Okay, is the latest floor, is a resistance that has turned into support in September. It's a resistance that used to be in September and October, now turns into support. Okay, so that's our floor. However, the fact that RSI, look at here, the fact that RSIs keep posting higher lows, okay, the fact that MACD is rising, look at that, the fact that moving averages over here and the Bollingers, let's say the Bollingers are expanding higher. Can you see that? That is expanding higher and points higher as well. All these indicate that this reversal that we have seen since Friday is a buying the dip opportunity. But yes, if I just go down to the 4-hour chart, I could just post the Fibonacci level from my latest peak down to my bottom to see where it's standing. Is already recovering, has already recovered more than 40% of the losses that we have seen since Friday. So the key question now is whether it will sustain gains by the end of the day. So daily outlook, as I said, remains positive. Intraday outlook also remains positive. MACD positive. RSI turned back to 50, but it didn't break it, and it's sideways at the 50 level. The upper channel that we have seen since Monday. Oops, wrong. The upper channel that we have seen since Monday remains intact, so it remains in an up channel. So that looks to be a potential buying the dip mode, but we need to see it. Sorry, we need to see it. If I zoom in, close it, the 1-hour session above the 10327 level. A closure above this level could open the doors to the 50% Fibonacci level. That would be at 103.50, so another 20 pips higher. And any further boost, of course, could turn the asset also up to 103.80 territory. Okay? Sorry, guys, I'm struggling a bit over here. So, what's next? Of course, cable dominates the attention lately. Very, very similar performance as euro. As I said, there are assets that they had a remarkable, sorry, a remarkable performance, but that comes in contrast with their fundamentals. So what we have over here, sorry, for for Nasdaq is a very sharp rally. Okay, for Nasdaq, for cable, sorry, very sharp rally for 9 weeks now. Okay, so that's the weekly chart. Okay, you can ignore it a bit just for me to just to see the overall picture. That sharp rally recovered more than 38% of the losses that we have seen for more than a year and a half, more than a year and a half actually. Now, momentum, however, can you see? This is very interesting, guys. I don't know if you find it interesting as me, but look at that. So, declining MACD, but right now we have a sharp rise of it with signal line, though, remains well below it. Okay, so Is this a signal that this rally is temporary or not? That this is what we should this is what we should monitor from now onwards, because if we have in times that we have, for let me find an example. Actually, we have a decline in MACD, but suddenly there is a recovery, but the MACD remains well negative, but is slowing down a bit. You see, it's starting to turn to the to zero, but signal line remains well below it. That's an indication that we might have some temporary recovery before another attempt to the downside. Again, like here, temporary recovery before a resumption of a long downtrend. So sometimes it has ahead of time, sometimes it's on time. Okay? So this is what we should monitor for the time being. We have a sharp rally, rising MACD, but with signal line well below our histogram. We have a decline in RSI, and you can tell me, but Andrea, what are you saying? RSI is not declining. It is declining. Lower lows, lower lows, lower lows. Break it over here, broke it over here, but still close to 50 territory. And let me be precise. 50. At 50. So we don't have a clear indication. We don't have an indication that this rally, even though it lasted 9 weeks, it will change this bear market that we have seen from cable for more than a year now. Okay? Now, daily chart. Zoom in. Oops. 1, 2, 3, and zoom in again because it's quite tiny. Okay. Yeah, so sideways, 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 sideways. But if I zoom in, you're gonna see that despite some very choppy last 1, 2, 3, 4, 5 days, a 5 and 9 exponential moving average and 20-day moving average, they continue to pointing higher. Okay, if I just detect a bit this window of MACD, you can see that they keep pointing higher. The same stands for Bollingers, pointing higher, pointing higher, pointing higher. So let's see our indicators. MACD, come on, baby. MACD rising, RSI. Let me get rid of this yellow line over here. Perfect. What's going on over here? So as I was saying, the RSI is still at 62 and keeps pointing higher. You see that it keeps pointing higher. So that suggests that regardless of this choppiness, there is further room to the upside. Now, 4-hour. Sideways, doji, 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 boom, boom. But still, we have a ceiling. Ceiling number 11955, and ceiling number 2 is 120. I will use it as a round number. 120. So let's see what's going on actually intraday. 1, 2, 3 consecutive bullish strong candles. Why does that? Bullish candles. Okay, nice, interesting, very, very interesting. So a lot of positive bias intraday with 3 consecutive bullish candles, overbought though because they are outside the Bollinger, so we might see a bit of a slowdown right now. Retesting November last week's peak, but still it shows that there is momentum. So we might have a bit of a sideways movement for the time being, maybe until the data are out, but what dominates in the cable is bullish bias from market indicators, from the direction of the intraday moving averages, Bollingers, rise in momentum. This is what I can see based on our indicators. And if I use my stochastic, you can see also that it's keep pointing higher even though it breached 80 territory. So what we might be the case is some kind of a very temporary, very short time frame sideways movement. Okay, might last for many hours, you can see over here, um but yeah, the bulls have not lost the control, have not lost their momentum, and I taught you that also the daily chart. The daily chart also remains in line with some more room to the upside. Okay, everything will be clearer if we see a break of 120. We've seen gold. Oh, Paulinus. We cannot provide signals, but we have some signal tools. Auto Chartis, Advanced Insights. Maybe you can try that. And also, if you want, we can have a one-to-one call with either me or Stuart to check what is that you're doing wrong. Are you following a strategy? We need to go through with you your strategy to see what you're actually doing wrong. Can you please arrange that with your agent? If you want help, please tell him to arrange a call with us, okay? Just to go through your strategy, your financial, to see what happened. You cannot see clearly. Oh God. Euro yen, of course. Euro yen. Sorry. Hmm. Hmm. What we have over here? Bum. Up. So it's posting some kind of a. Let me double check. Is this some kind of a flag? That's very interesting. Very, very interesting. Because this looks to be some kind of a flag. And flag, if it breaks upwards, it's bullish. But we need, my dear, what's for dollar yen? Dollar yen is quite interesting. Bethel. It's quite interesting because this looks like a flag. Can you see that? Like a flag. Not sure if it's an actual flag, but it looks like a flag for the time being. So if we see decisive break today, okay, and further attention, further rise next week, that could imply to a continuation of this uptrend that we have seen um, the last few months. So even though that comes in contrast with momentum, because momentum is very, very weak. MACD is nearly zero, RSI at 55. So something to add in our watch list. What is certain over here is that the edge of the Bollingers, which also coincides with October peak, is key resistance level. And sorry, at the bottom of October at 14430, it's the very, very immediate support level. And the very next one is the 14330. Okay, that's the immediate support and resistance levels in the daily chart. But have in mind that if we see a decisive breakout of this flag, it could be a beginning of a new uptrend for a few days. But momentum doesn't support this scenario, so that raises a lot of questions in my head. We need to be a bit careful on this one. Let's put the 4-hour chart to see if we have a clear indication. We don't. It's a very narrow, the slope is very, very weak. Okay, there is rising momentum, but as I said, there is not a steep rise. It's very, very narrow. Yeah, the asset, as you can see, indeed, it had some fluctuations and some like rallies, but since 24th of October, it didn't manage to move above 64 level, the MACD, I mean. So um, that could be a retracement signal, at least intraday. It's interesting indeed, but just for monitoring for the time being, because it's not clear what we're having over here. Okay, we have it's not really clear, and it has a bit of a mixed outlook. So momentum indicators are not in agreement with the price action, and that makes a bit the things quite funny. Yeah, even the 1-hour chart, you see, it's a bit flat. MACD moving averages are okay, started pointing higher again, but very, very it's neutral to positive. See, MACD is positive, but RSI is slowing down. So MACD positive, RSI slow it down or even flatten. A stochastic have a bullish cross, but as you can see, it already started pointing on the right hand side, implying that this is a temporary, or this bounce that we have seen the last 4 hours, it already ran out of steam. So very, very mixed conditions over here, team. So Resistance at 146.15 and support at 105.17 70, sorry. Because for the time being, it looks that the weaker RSI, flatten RSI, the stochastic that they are pointing on the sideways movement, the moving average they're pointing on a sideways movement, the failure to break the 146 yet. Everything implied to potential either continuation of the sideways movement or more bearish pressure than bullish one. Yeah. Yep, yep. So, next question. Something is indeed an asset that we could monitor in a daily chart, but intraday is not something fascinating, to be honest. It's just we need to keep an eye on whether it will manage to confirm this flag and eventually break it. But that's a daily chart. I mean, this is a medium term um, in time frame. Hello from Ghana. Hello, Alex. New Zealand, of course. So how many questions do we still? Ah, okay, guys. I've reached to the very final question. So if you want anything else, now is the time to tell me about it. New Zealand dollar. Choppiness and indecision today is a bit logical, as I said. Okay, U.S. markets will be closed tomorrow and on Friday. Okay, New Zealand dollar sideways. But so I guess you're asking about intraday basis, right there, because we had some decisive boosts. Oops, some decisive boost, especially after the sorry, RBNZ increase rates overnight this morning, actually, to be precise, overnight for some of you. So, sorry. Um, so that's why New Zealand dollar found yesterday and in the Asia session overnight ground, and it posted a high and it tested the 0.62 level. Now we've seen a bit of a slowdown, but the fact that it remains above the 20-day period moving average, okay, with MACD positive, that implies that remains in the upwards channel. Okay, so the outlook remains positive for Kiwi over here, at least in the intraday basis. So you see, remains above its 20 period moving average. Okay, for the whole week, we had a correction, but despite the pressure, is still holding this as a support. MACD is still positive. RSI indeed came down at 56, but is holding a floor above 50 level. Okay. 50, here we are, 50. Stochastic confirmed earlier with a bearish cross the pullback. So focus could be, if you are an intraday trader, focus will be on stochastic, whether we're gonna see it turning up high again and posting a bullish cross like this one. So this, something like that, would be a sign that we're gonna have again the asset up higher again, potentially retest the 0.62 level. Which should be somewhere here. Okay, cannot put it precisely, but you got the point. So, yeah, Keep monitor stochastic along with our 5 and 9 exponential moving average for the 1 hour chart. Daily was a nice 2 months for Kiwi over here, breaking the 20-day week moving average, as you can see, and holding above it for 3 consecutive weeks. Okay, so the MACD, however, remains still negative. RSI the same, RSI is at 50. So the overall negative outlook for Kiwi hasn't changed. So it will be key whether that will be eventually a turning point or it will be the beginning of a new trend. So guys, there are a lot of currency pairs that are close to turning points. So it's good at the end of every week to check your weekly candles or Sunday morning, okay? Just to get prepared for the week ahead because they will give you the indication whether we are in a turning point or not. Pound, euro, dollar, kiwi right now. So you need to keep monitoring your weekly candles at the end of each week or at the beginning of the new week. That will be a huge confirmation whether the overall trend, the long term trend changes or whether we have the continuation of the downtrends that we have seen from euro dollar, from kiwi dollar, from pound dollar so far. So, okay, turning points. So keep monitoring your weekly charts. Any further questions? No. Okay. Before I call it a date, I will just give me a second. Here we are, just to summarize a bit. Okay. So we had PMIs today, much stronger than expected in euro and pound and the UK. Something that didn't really affect significantly the euro and pound, didn't really help them a lot, okay? Because after all, both markets, both European and UK markets, um, are experiencing some kind of a policy divergence, um, uh, and I mean against the U.S. economy. Okay, so and we are expecting thin trading due to the holidays. Now, obviously, what left for the time being is the FOMC meeting, which is expected to be dovish one. And if I said earlier, as I said earlier, if they indeed come, if the FOMC minutes today confirms um, that the Fed will start slowing the tightening, that theoretically could have a positive impact on the stocks, but negative impact on the dollar. But, it's a big but over here. Don't forget that this is the very last day before US goes to holidays. So it's unlikely to see the aftermath of the FOMC tomorrow or on Friday. We will see the aftermath of the FOMC meeting probably on Monday, that markets will be back, or during the minutes tonight. But afterwards, market will be done. So any further rallies or drifts and etc. will are expected next week. So next week we're expecting the aftermath of the FOMC. Either if we see an FOMC that is very very dovish, or even if we see an FOMC that is very very hawkish. Who knows? This is what we expect, but that's upon FOMC to confirm. What else I wanted to mention? So in general, a dollar that is sideways to weak, some ground. The other currencies have found some ground, but there is a lot of indecision so far today. Stocks were in a rally, and so far today they are holding their gains, but they move a bit cautious and sideways because of the moderate sentiment. Uh, Oil. We forgot about oil and gold. Gold, we mentioned gold. So a high at 1748 in the beginning of the day. But the fact that the Fed outlook and the dollar remain the key driving factors for gold, um, we might see the investors turning to the safety of dollar tonight. Okay, so everything depends on tonight's minutes. And oil, last but not least. Where's my oil? Here we are. Oil remains under pressure. Actually retested on Monday the bottom, the break, the September's bottom is below 80 territory, with MACD keep moving lower, RSI keep moving lower, Bollinger's expanding lower, implying um, that there is further steam to the downside. So the real floor for oil, okay, is the September's bottom and Monday's bottom. So 76 or 75, 74.80 level is the next support, as we have a deteriorating outlook for the oil in the daily chart. And just to explain a bit why this happened, this is affected by several factors. As I said, the fact that China, the biggest economy in the world, is having a lot of COVID cases and considered COVID curbs. It's also the gas, the European gas issue. Sorry. So, despite of the strong PMI reports in Europe, um, the fact that geopolitics are still on. What I mean by geopolitics, I'm referring to the fact that there were some reports that the EU is set to agree a relative high cap on Russian oil. It was around 65 to $70 per barrel, if I'm not mistaken. That happened today. Um, so the fact that the cap suggests limited limited impact on trading. But at the same time, Russia is selling at the oil discounted. So that adds pressure on the US oil, on the Brent as well. Let's not forget, I mentioned China. What else I'm missing? Threats from Russia to curtail flows through one of the remaining gas pipelines. So it's all about geopolitics. So for oil, is geopolitics, is the China thing, the China recovery or the potential lockdown of China. That's the very two key things that are driving the oil lower. And from technical perspective, it looks weak as well. A consecutive decline, lower lows, lower highs, momentum turns negative. So as I said, the next floor is down to September's bottom at 76 or 74.80. Okay, so that's it from me, guys. Hopefully, you find our session helpful. If there is any further question, now is the time to say it. Otherwise, I'm gonna call it a date. Okay, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Okay. Take care on the FOMC tonight. And don't forget that it's a short week. Okay, I repeated it very, many times, but it matters. It matters because we've seen a lot of squaring positions. So see you again. Not sure about Friday, but definitely next week. Thank you. Bye.